Wednesday, March 8th, 2017, Monaco 64, home of alternative economics and contrarian views. So I'd like to talk about the possibility of a Bitcoin ETF and why I think it's a terrible decision for the concept of the cryptocurrency. And you might ask, how can it be bad, if more people are going to be interested in Bitcoin and the ETF? Well, I think it's a little bit of a Trojan horse, having an ETF for Bitcoin. And I want to go back to gold. And I made a video a week or so ago about the COMEX and gold manipulation. And I pointed out that actually when gold was legalized again monetarily for American citizens back on January 1st, 1975, that's when the COMEX gold future contract started trading. So, and I think, the derivatives market, I know that back in, hundreds of years ago, derivatives were used by farmers, producers, for good purpose, but a lot of the modern day fiat money derivatives, in my opinion, are just used to manipulate the markets, and they don't reflect the right price of instruments or assets. We've got derivatives now since the 70s, early 80s. We got derivatives on bonds, on treasuries, on everything, and the markets have become distorted. You can see, through gold and silver on COMEX, how, they can manipulate the market, the physical market, through the paper or derivatives market. So I personally think it's a horrible idea to come up with a Bitcoin ETF. And there's an article, the reason I'm talking about this is because there's an article yesterday on Zero Hedge, and it says SEC said to decide on Bitcoin ETF by Friday. And, it says here that the decision would cap a more than 3-year period since investors Cameron and Tyler Winklevoss first filed with the SEC in mid-2013. On the other side of the coin, you may argue, well, people are going to have more opportunities to buy, Bitcoin through the ETF, and it's a good investment for them. But I would argue that Bitcoin is not an investment. Bitcoin is a currency, and it's a currency that you should have. Of course, it's not physical because it's a digital currency, but you should have it in your wallet. Your digital wallet, and it's a currency that you should hold. It's just like money, like gold. It's not an investment, it's money. And it goes on to say, one of the guys here in the article says, a quote from the article says, let's see here, for his part, Bishop believes the ETF should be approved. And I quote this guy, Bishop, where is he from? Let's see. Jeff Bishop is a co-founder of investor message board platform ragingbull.com and ETF expert. And this guy Bishop says it should be up to investors to decide the true price of Bitcoin. The more liquidity and options to trade it, the more transparent and accurate the pricing will be. Well, that might be true to some extent, but what's the problem with the Bitcoin price that we've got now? Why do we need, ETFs, options, to determine the price of Bitcoin? It will just lead to more and more. It will lead to the possible beginning of manipulation of the Bitcoin price. Believe me, when something like that begins, an ETF, which is basically an exchange-traded fund, there's room for a lot of manipulation. You have with GLD, when it came out in I think 2004 or 5, I don't remember exactly the year, the gold ETF, yes, it might have driven a lot of money into gold, but personally, for the small investor who buys gold, GLD ETF, they don't really get the gold. So the point of Bitcoin is that you're actually buying something that's limited, and it's a currency, a cryptocurrency. And I think it's a bad idea to have an ETF. It's gonna, maybe the big, institutional investors, they will be able to say, to the ETF provider, I want you to send me, my Bitcoins to this wallet. I haven't really read about the ETF, the details, but I would dare to say that a small investors who buy a Bitcoin or half a Bitcoin ETF, if he goes to the ETF provider and says, "Oh, can I have the Bitcoin and send it to this wallet?" I'm not sure that will happen. So yeah, I think it's a really bad idea, and uh, SEC, I don't think they do a good job of regulating markets anyway. So yes, the price of Bitcoin might have gone up lately because people are expecting this, confirmation by the SEC that it will allow a Bitcoin ETF. And the article says that it's not certain that they will, approve this ETF, but there's kind of a deadline by Friday, and the experts say that if the SEC hasn't rejected by now, it means that they will accept it, but it's not certain. And if they do come up with a Bitcoin ETF, you could actually see the price of Bitcoin go down, because it's an old adage from Wall Street. It says, buy the rumor, sell the fact. But personally, I think it's a really bad idea to have a Bitcoin ETF. There's nothing wrong with Bitcoin right now. It's a currency. It's money, and we don't need derivatives market for Bitcoin. So I'm against it. And look what's happened to gold and silver in the last 45 years. Of having like a futures market, options market, OTC markets by the bullion banks. It's completely manipulated, and there's no price discovery. It's actually, this guy Bishop says, oh, it will have, the more markets there are, the more price discovery there will be. Not necessarily. Do we really know what the price of gold should be? We know what the price of paper gold is. So I think it's a bad idea. This is the road to paper Bitcoin, in my opinion, and and hopefully, I actually hope the SEC does not approve it, and I don't think they will. If they do not approve it, it's not because of the reasons I'm talking about. It's just because of other reasons. But that would be a blessing in disguise, I would say, for proponents of cryptocurrencies and Bitcoin in general. So now to the markets. Yeah, gold and silver have been, on a downward path the last week or so. Frustrating. Yeah, and it seems like it's because of, the Fed's language, and that they're going to raise rates next Wednesday on the 15th of March. Their meeting starts on Tuesday. It's a 2-day meeting, Wednesday the 14th and 15th. They decide on the 15th. There is, of course, a 95% chance now that they will hike. I think they will hike. And yeah, up until then, it probably will be painful to watch gold and silver. But the last time they hiked rates was December 16th, 2016, if I'm not mistaken. And that was pretty much when gold bottomed around 11.22.25. So right now we're 12.12. So we're still, the hiked rate, and gold has actually gone up. So I would say that, yeah, we could see gold and silver up until next week be under pressure. And then, I think we will bottom and we will see gold go back up. The Federal Reserve has a gargantuan, challenge, in my opinion, with the monetary policy. Their monetary policy is not a normal monetary policy that we knew prior to 2008. You know, back then, their balance sheet was really stable. It didn't change. It was like 600, 800 billion. And the thing that mattered was the Fed funds rate. But now, yes, they might hike the Fed funds rate up to near 1%. But don't forget about their balance sheet, which, you know, has 4.5 trillion in treasuries and mortgage-backed securities. Technically, if they really wanted to reverse their monetary policy, they should start with not reinvesting the coupons or the interest they get from these securities. So if they get interest and coupons, they should, you know, pay it back to the treasury, or lend it back, liquidate their holdings. They should start by liquidating their holdings and get their balance sheet back to 800 billion or a trillion from 4.5 trillion, and then they can start thinking about raising the short-term rates. But they're going about it the other way around. They're gonna start by raising rates, which they have done, and that could create a lot of volatility in the bond markets, especially the longer end of the bond market. And the Fed has a lot of long-term paper. They, especially through Operation Twist, they switch from short-term treasuries and mortgage-backed securities to longer-term dated. And right now, the 10-year yield is 2.54, so we're back above 2.5%. We had stabilized below 2.5. Earlier this year, we got down to around 2.30, and the key level really was the high from last year, which is roughly around 2.63%. The 30-year right now is 3.13. So yeah. The Federal Reserve has a really tough job on its hands. I personally don't understand why they're hiking now. Not that I don't think rates should be normalized, but the fact that the Atlanta Fed, which keeps track of GDP forecasts, they've lowered it, the GDP for the first quarter, their forecast to 1.3. That's their most recent estimate. A few months ago, it was above 2%. So the Federal Reserve is hiking interest rates in a period where the economy is slowing down. So I think it will be really interesting, and I think we need to keep an eye on the longer end of the bond market and see what happens there. The shorter end, they can control better the interest, but the longer end we need to keep an eye on. So yeah, Bitcoin ETF, bad idea in my opinion. Hopefully it won't happen. And yeah, that's it. If you enjoyed this video, please give me a thumbs up, share it far and wide. If you haven't subscribed to my channel yet, please do. If you'd like to donate to my channel, there's some links below in the description. Take care. Bye.